Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got that bounce as predicted off of the 706 diagonal pitch fan level of this pitch fan we've had price in for some time, since January of this year. Been respecting quite nicely. Also, we came to a level here, a resistance point on some time frames here, a lot of wickage here, so some support could have been had. Looking at a support bounce idea. Do we see a rejection here? We are at some possible resistance levels. Let's go look at the liquidity of high block. What is high block? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie. So let's do it now. Shout out to everyone here. Booyah, booyah. So, as we predicted, we came back into these pools over here. Let's go ahead and make this relative into max liquidity. I wish I could set that to default. I hate doing that every time, but it came to this 411 actually $1 million 100x pool here and liquidated them.
Fatality.
And that's what happens when you don't pay yourself in profit and you have hopium for lower prices. Actually, I don't even think they experienced profit, because they bought into the V-shaped and they were given their entry back, but they didn't take it, and henceforth were liquidated. And now we see some longs opening up as we enter into these high resistance levels. 160 million up in the high up here at 43.40. Some longs opening up here, which they V-shaped into the 100xers here.
Fatality.
And yeah, the 100xers need to be ultra careful, because their liquidation point is a hop, skip, and a jump away. The 50x brethren just about to get knocked out here at 42.707. And seeing what they induce here will determine whether it goes higher or lower. If we look here and zoom out to where we stand here, let's go ahead and run this again. Hold up. We do have a clearing the range zone up here. There is the 25x shorts up here at 44.189. We could clear this range, but as it stands right now, there is no liquidity shorting from that dip right there, and there is more longs to come down to here at particularly this 50x pool and their brethren in this candle here. 132 million down at 42.502. 42.502. Let's go ahead into the chart and update and remove some stuff and consolidate the prediction from yesterday. Interesting that we had all that high impact news, but we got that zone to a T yet again. But stop congratulating yourself, it's in the past. No trade is connected to the next, so we must clear our charts and think fresh, because it could go higher from here. You never know. So let's clear, 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 clear. And yeah, this is the only thing that we will keep from that. Okay, so let's go ahead and expand our vision to the higher time frame pools to see what the higher time frame is about here as we expand our vision to the 7-day. Gotta switch this over to max liquidity. I can't be, just a heads up, I can't be live for that long. I do have to go into work early for the rest of the holiday. We got a Christmas performance to prepare for. So there is some narrative on the 7-day to come up into this 45k level and put in a higher high. So be aware of that. Also, you have these pools down at 39.7 that could be tapped into as well. The overall band of liquidity on the 7-day is higher to the upside, So we could be seeing a continuation, so be careful on that front. Going to the monthly. The monthly also has some bands of liquidity all the way up to that 45.8 region, nearing double digits, not quite there at the double digit. And what do I mean by that? Double digits as in 10 billion up here at 45.5, 9 billion 45.4, nearly 10 billion 45.3. So there's a good $70 billion up here in that 45.8 region. So that is why I say be careful about shorting or waiting for 3-hit confirmation on that idea. The overall draw, though, on liquidity is to the downside. So as you see the weight of the tug of war of the sell side versus the buy side number is decreasing while the sell side is increasing. So the sell side becomes the dead weight that could eventually drop to that 34K price tag. Do they scare out the shorts one more time? Do they put in a higher high? Or is this the first lower high on a downtrend? Remember, I said that they do not always clear the range. When the market structure shift out of here, they leave some positions protected, as they did down here at 34K. They did not clear the 34K range. Instead, let it become this huge band of liquidity that is now approaching $150 billion. So they could be coming down to this at some time leading into the halving. I would not be surprised if that is the case, and we are approaching the resistance zones for that narrative shift. 6-month also has the larger bands down below. Going to the 2-year. 2-year time frame, yes, same. But you're starting to get some pools up here in the 50K region. Some people are calling for some sort of cycle, super cycle event. Who knows what the future holds, but you do have a band of liquidity, 76 billion up at 45.2. Do we put in a higher high or not? Let's go into the monthly and see if Thursday, December 14th, midweek reversal Thursday is going to mean a reversal to the downside or a continuation from Wednesday to the upside. Let's go ahead and update the charts and throw on the momentum to see what's up. Okay. Momentum on. Here we go. Heads up display on. This is a link in the description for more. You can read about each of these components by scrolling down to features. There's toggle switches to take a look at gander at it at Bitcoin's bottom last November, before we knew it was a bottom at 15K. You got the trend cloud, the baselines, and the stochastic array, which gives you alerts to your phone. Quite nice, if I do say so myself, so you can be your own guru, as it says. So you don't need anyone. So we had the cross-up event. We were going over this cross-up on the 4-hour time frame. What do I mean by that? Well, the baseline is your leading moving average. There are very few leading moving averages on the market, and we got that formula inside the candle here. And when price closes beneath the baselines, as it did here, you see this suppression of price to the downside. Conversely, when you see price action holding the baselines and then it starts to make its way up, you see this basic idea of it coming up. Now the baselines on the 4-hour are still open in a manner suggestive of continuation, and we have reclaimed the 4-hour cloud. So this brings us to the Momentum Master Trinity of the cloud formula and what we were looking at on the hourly to shift, and this is what we saw. So when the cloud is thick, as it was over here, we got this rejection off of the cloud. We got a second rejection, and then we got a shift. And right here on the hourly time frame, right at midnight, as the London closed, you had this candle close above the cloud, and that would have been your smooth as a baby's behind entry for that long idea, if you were so inclined. And you would be receiving these alerts to your phone, 4 or 5 time frames, 6 time frames oversold. So we had these time frames oversold, and now we are getting some fatigue on the higher time frames, hence the diamonds the diamonds are the higher time frame fatigue. We do have a quick guide for that when you sign up, but let's go ahead and do our daily diligence from the daily time frame on lower. So the daily time frame is having this cross down event over here. We have a cross down of the baselines, and it is so far suppressing the price. We did not get above the baseline, so to keep it back to home, this could be that ABC idea to the downside, but we don't want to buy into one side or the other, or we will be that liquidity. You got to be flowing like the flow of time itself and go with the flow wherever the flow is. So the 3-day we're looking at in the next 23 hours, this 3-day candle close, does this cascade into a cross down event? So far we are at the precipice once again for that cross down event to cascade to the 3-day. The last time that happened was back here in July, and we saw this massive downtrend as a result. So when we see that close on the 3-day, it will be a nice signal to remain in a possible swing short. Does that mean that will be the only entry? No. At this time we had this cross down event, it came back up and then continued to the downside, so that would have been a beautiful entry zone. So yeah, we're just riffing in the flow of time and space here and looking at the 3-day. So the 3-day stochastic is coming down in a manner. The money flow is above the RSI. The Williams is about to cross down perhaps on the 3-day. So keeping our eyes on when the 3-day closes at the end of Thursday, leading into Run for Profit Friday. Let's go see what the news brings in for today. Okay. So we had all those red folders. We continue to have red folders. We have some monetary policy summaries, some bank rates, and lots of red folders. The retail sales, unemployment claims. So a lot of volatility this week and tomorrow as well. PMI on Friday. So expect some more volatility inbound and trade safe. Size down if you're not used to what you're experiencing with this. And yeah, be trade safe. And looking at the daily, coming down to the daily time frame. So this is this template for starting from the higher time frame and making your way lower. Yeah, you could be looking for fair value gaps and daily draws on liquidity, but the momentum also gives this suggested narrative for the volume tapering. Here, the volume on the daily, we have yet to come back and kiss this daily cloud. We have had this nice uptrend since October 14th, and we had those rocket ships for you down there as well. And we have yet to even test the super trend or the cloud, which is 6.1% away for the super trend, even more for that cloud. So the cloud is starting to taper here in a manner. We have these little tapering ideas on the 6-hour and the 12-hour, so we are starting to see this pause in the momentum as we go lower. Daily time frame stochastic has come down here after having some bearish divergence, and the money flow is above the RSI, suggesting you could come down some more, with the Williams potential suppression of this pushing the stochastic up here down some more. All right, let's go to the 22-hour. It's why do I use a 22-hour? It's a long story, but back testing these laminar flow broken time frames, the way basically air goes around the airfoil. If you have broken candles like 22 2 hours, 22 2 hours, 22 2 hours, they're broken time frames, so the way the momentum flows around resets stochastic probabilities in a manner that insinuates stuff that's not meant to be read by retail. So if you look at the money flow coming beneath the RSI here, this disparity between the RSI and the money flow is what we look at for those bounce ideas. Conversely, if you have the money flow above the RSI, it starts to taper back down. Since we've been in a bull trend, this is distinguished by less of a drop, but still plays out just the same. And then the money flow comes beneath the RSI, and then boom, we go up some more. So that is why we were seeing this potential bounce off of the 22 and the 12-hour cloud. And if we go and look at that cloud, the cloud was tapering, and this candle is a blue vector candle. The blue vector is signifying stopping volume. So is this a stopping volume candle on the shorts? Only time will tell. Going to the 12-hour, this is also the cloud on the 12-hour, tapering in a manner here as we approach the 6-hour cloud up here for that bearish potential kiss to the cloud. If we go to the 12-hour is oversold now with the money flow beneath the RSI, giving you this burst up bounce idea. Going to the 6, as it stands, we're still oversold on the 12-hour, so we could continue this push upwards to that 45.5 higher high idea. So this is why we're not saying enter a short necessarily, because if you look here, while we are butting our head up against this 6-hour cloud, you trade with the cloud. So if we start closing 6-hour candles above this region, above this cloud, then the narrative will be to the upside. Basically, a B wave should not encroach on the A wave. If the B wave goes higher, then this is just a A, B, C to a higher high. If that doesn't make sense, basically, if you cannot get above this level here, this bearish super trend, then you're a clandestine for downside. If you get above this level, you're a clandestine for upside. So it's all about how these candles close. I like the 6-hour because it coincides with London Open and New York Open. So look for the 6-hour candle close in 5 hours. What does London do with this candle here? The 6-hour momentum here on the cross up event of the 6-hour suggests you still have more momentum to the upside, so be aware of that. If we look at the 4-hour time frame, the 4-hour is gassed in terms of being overbought and getting the money flow above the RSI here. However, you are above the cloud at this time and you managed to close the 4-hour above that. You wicked into the super trend, but we did not close a candle above the super trend just yet. So I would be interested to see how this 4-hour candle closes. If we go to, let me delete this, we already went over that, to the hourly time frame. So the hourly time frame is overbought and starting to come down here. This is where your cloud kiss potential comes in. What do I mean by a cloud kiss? Well, the cloud, as you see, has been shifting here as predicted, coming to the upside here. So does price action make its way down and kiss and bounce off the cloud or not? That is what the question is about. And I was talking about before you short, you wait for 3 hits to the high. So you would get 1, 2, and then a potential like third weakening one. It could be at an equal level, but you would get something like this. And that would be your higher probability short, not just shorting for no reason up here. Wait for the confirmation with the 3 hits to the high idea. Now, coming down to this region, how would you measure this? Well, with these yellow lines on my chart are daily support and resistance levels. Those are the only horizontal lines I put in yellow. The green ones are lows and highs of the internal range liquidity. So if we go here and we measure a Fibonacci from the bottom wick to the top wick here, you move in the direction of the impulse. So we could come down to these golden pocket regions. You have a pocket here that would also likely coincide with the cloud as the cloud makes its ascent over time. So how does it react off the cloud here? So you could be seeing some pullback at least to this range, but it could be met with some strength to the upside. And these are some of the deviation levels here. 618 for that would be up in this 45.2, which coincides nicely with the higher high narrative liquidity sweep on the monthly time frame up in here. 45.6, 45.7, this liquidity zone. So even if we go down here, we could be going up to some higher highs. So don't be too quick to jump the gun into a short. Let's go say what's up to the chat. How's everyone doing? Nice. I've been made some gains fatality. Yo, Mark, let's get these gains in. Mark, you have momentum as yet? I got a 20. I'm assuming some. Nice. I actually don't have it. I'll hop in. Nice. Thanks, bro. No worries. At least you didn't get the Black Friday. Yeah, you did it. Oh, nice. Cool. So, yeah, if we're going to the, what's it called? 45.2, that is a possibility. So I'm gonna go take a look at the broader markets to see if there's anything that, ooh, we got a nice drop on the dollar. So that I don't know what the FOMC news was. I was fast asleep being in Asia and everything. So we came all the way back down to the bottom of this bearish trend. We got a huge rejection off of the 786. We never made it above the bearish trend based fib levels, and we are coming back down to a level here. I guess there was a bearish news for the dollar. Not sure what that's about. We also had, I think, oil auctions or something, and that is getting a bounce off of a liquidity zone here. We were talking about a fair value gap down in here, and it looks like we found a little bit of support there after a rejection after the wick here, and coming back down into there for oil. Still a fair value gap draw up in here. We have rejected the 786 of this level here, so be aware of that for oil. Coming to the gold. Gold getting a little bit of a surge after wicking into a take profit level on a trend-based fib for bullishness, and coming back down to a local impulse level, most likely a deep retrace. 786 bounce off of that impulse to continue higher. Needs to break this 706 to continue back up into this region. A wick recovery off of that seems likely, so gold could still be making some interesting plays here. Going to the Bitcoin dominance. So the dominance we are looking for, even if it goes up to here, it's looking like the curvature of this momentum on dominance is dropping, so we could be seeing some continuation to the downside, which means they give the alts a little bit more of a rally. The USDT dominance we were saying was going to take a drop down to this region. If it gets a surge up here, this would insinuate people putting money back into the trade. So we already said that it was going to come down to here. It did. And we already said it's possibly going to come up to here, and it might. Now, if it goes up to here, the narrative of BTC going up to here would coincide with that idea. So as it stands, we are on par for that idea. This curvature of the 12-hour and the rejection at the 12-hour cloud, the curvature remaining, insinuates we could be going to that region. This C wave played out, so we can remove this for now, and we can see if it's going to go up to this region. 12-hour time frame had some hidden bearish divergence on the money flow, which rejected off of that. And yeah, 6 hour coming down on USDT dominance. We are at the cloud right now. We closed just below it, so we would have to see some conviction above. One thing that's disheartening for a long idea is this cross down event on the 6 hour. You'd have to see some mighty good conviction candles above up to here for this to start to cross out as a fake out. If it isn't a fake out, then you could be seeing some more downside, which actually, wait, if this wait, I'm getting mixed up. USDT going up means people getting knocked out of their trades as it drops. So this was the drop we were seeing when Bitcoin dropped. People putting their money in. Bullishness is downside, bearishness is upside. So give me a second here. Let me get tuned in properly here. USDT dominance. Sorry, I had it mixed up. When the USDT dominance goes up, Bitcoin goes down. So this cross down event on the 6 hour and this rejection of the cloud, we are watching this impulse carefully. Do we continue lower? If this rejects the cloud and goes lower here, then you basically are putting money into trades and possibly seeing higher prices for BTC. If this goes up here, then we are going lower. So this is at a precipice on the cloud for the potential for Bitcoin to go down or up. Bitcoin goes up, this goes down. There is a dominance chart that you can look at here. Here's the dominance chart. You can pause it. If Bitcoin dominance increases and Bitcoin increases, the alts decrease. If it increases and BTC decreases, they dump fast. So knowing the cycle of the dominance is very important for your alt trades, and you should be looking at it before you consider even entering any alt at all. So the dominance decreasing is what you want to see for an alt season, with Bitcoin going up. Decreasing dominance on Bitcoin. This is USDT dominance because this will give you the insinuation of people on the sideline waiting to enter. If they enter, they're leaving dominance of USDT. If they rise, it's getting kicked back into USDT, as in stop loss hit. So we will see what this flashpoint brings at this golden pocket region. We have basically wicked into a deep retrace level, so there is some last line in the sand here at the 786 zone. Do we come a little bit lower and wick off of that? Currently we are beneath the cloud, so we could be seeing this curve back down as a fake out, and this could be coming back down in a manner. So watch out for this type of sly play in a continuation for a double bottom event, and that would line up with the rise for BTC. Going to the 4 hour, beneath the cloud on the 4 hour, suggesting more insertion of money, the aggression of which, I guess with the dollar dropping, caused more bullishness than. So this bullishness for Bitcoin could continue, particularly based off of the veracity of this drop on the Dixie, gives a pause for the dollar and risk on assets like Bitcoin. We had a nuke here too, interesting. So the nuke, if you were watching the nuke, that nuke on the dollar played out perfectly. Rocket to nuke, boom. All right, so yeah, Bitcoin, the veracity of the dollar drop could bring this Bitcoin play up more. So do we retrace down? Is it even going to come down to this area, or are we going to get an equilibrium bounce at the super trend? So the equilibrium lines up with the super trend too. Once again, we have a lot of inbound news, so trade safe and carefully, and always use a stop loss. So let's go see, we can look at one thing from you. Let's see, L2S not run today, Polygon sleeping giant. Great show as usually, hit them likes. Thank you. We can look at Matic. Let's go ahead and look at Matic and bid ya adieu. So we were looking at Matic taking this double top idea here over the weekend. We were saying false move Monday would bring the downside for the Bitcoin and alts, and sure enough it did. Boom, and came down to our target. We had the nukes, and I said I'm more likely to trust the nukes than not, and then double top, boom, came down. Now we're seeing the 5 time frames oversold, and then this coming up. The reason I like having the history on, okay, so it looks a little bit messy, right? I'll give you that. But if I turn off the history, I cannot see the history, so I won't see what time frames got exhausted here. I'll see the 4 and the 5. Okay, so I can see the consolidated. There was a 4 time frames oversold, 5 time frames oversold. So I can see the veracity in which it hits down and what time frames were oversold at that moment. So you had more higher time frames, but I want to see everything. I don't focus on it, so it just, I can see the number of times it closed and the amount of fatigue that it was inducing in retail as it comes down for that Judas swing up. All right, so it doesn't mean just buy here. They're not buy and sell signals, it's fatigue signals. If you look and read about stochastic array, it's a never before seen formula which monitors 7 time frames and 32 different indicator values. So it's a multiple time frame concept. So as Matic starts to break out here, you are seeing it come above the range, change the super trend, come above the trend cloud. The angle of the trend cloud is kind of flat. I'm not really appreciative of this angle. Looks like everything is taking a pause due to the inbound news, and you're seeing this kind of 4-hour curvature. Now we could be seeing an inversion of this cloud. I always say trade with the cloud, not against it. So every time you are above the cloud here, boom, you can see upside. So we are above the cloud, and you could invert this cloud and say the 4-hour will take you up here. Now the hourly and the 4-hour are overbought here, so I would expect some sort of consolidation above this channel here. If you get above this idea, then you basically will pause above here and kind of do something before you go. It's not going to be smooth sailing from here, but trading with the cloud, even though the cloud is thin, this could be an inversion play. We watched an inversion play on Bitcoin on the 12-hour doing this same move. Normally I like to see this type of play where it's rounding out on the bottom like this, and this angle is, and this curvature plus the thinning from purple to blue is the actual bottom, higher likely play to the upside. This is not my style to play, but it could play out. Coming up to recover this wick, there is a liquidity pool that it already recovered that, so that liquidity pool is taken. Let's go ahead and look at the liquidation levels for Matic. If the Bitcoin dominance drops and Bitcoin goes up, though, you could see a surge for Matic as well. Matiku. So you have more short liquidity up here at that 90-cent mark, so coming up into that range that we were just talking about. There's a candle drop down there, so getting that 91-cent mark up here. There is a 91-cent target basically up in here. So what do they do with that 91-cent guy? Looks like it could be coming up to that region to liquidate that target. So we'll keep a look at it. I can't say if it's going to go further than that, but you do have some trend-based fibs giving you some zones over here. So do we make it to the $5 mark? And that would also coincide with some levels over here, a wick over here from April. Do we start to make our way out? If Bitcoin plays ball, then you could be seeing Matic go up to these regions as well. We had that nice 12-hour cloud bounce on Matic, holding the super trend here. So we are still green light for go to the upside, although the cloud is tapering with all the news inbound this week. So that's my story, and I'm sticking to it, folks. So thank you for your time. We will say what's up to the chat one more time. That's it. Good. Yeah, so Matic does look good. So far, so good. They're above the clouds, so you're green light for go. Just looking at how Bitcoin will react here. It may not even retrace down to that 618. Sometimes it doesn't even need to recover the gap. This is just the safe man's bet, because breakout buying at a premium, not my style. I like to get down in the dirt and get these little discount arrays down here. Down in the dirt here with some confirmation is where I like to buy. Alright, so that is my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the